I mean, it's incredible the amount of flows that actually Bank of America had, 15 billion. Are we expecting more numbers like this from the big four?
I think we are. You know, there was definitely a rush to safety, and the big guys are seen as safe, both because of their size, but also the diversification of their deposit base. They don't have that concentration that some of the regionals have. So I think you are going to see that. And I think, you know, there had been this concern toward the end of last year about the big banks' profitability on some of those deposits. They're going to have to pass more of the rate hikes on to depositors. I wonder if this changes the calculus if they're seeing these big flows.
And at the same time, we're also hearing that the Fed may look at, you know, more oversight for some of these mid-sized banks. What does that look like?
Yeah, I think that could come in a number of ways. The stress tests, some of them don't have to participate, some don't have to participate every year. So you could see more banks added to that. I think there were 34 banks in last year's Dodd-Frank stress test. You could see that number rise. And then, you know, the liquidity coverage ratio, that's something that all the big banks have to keep an eye on. Some of the smaller banks, SVB was not subject to that. You know, that's something that would have perhaps flagged this risk of deposit outflows, and they would have had to hold more cash against that. You know, the big concern a few years ago when they started to roll back some of the regulation is this hurting, you know, these mid-sized banks at the expense of the big ones? But now I think, you know, they're rethinking that.